In today's video, you're going to learn what are fair value gaps, how to identify them, and how to utilize them in your trading. So what is a fair value gap? A fair value gap is a price gap consisting of three candles in which the wick of the first and the wick of the last candle do not overlap, how you see here. Notice this range between these two candles. This creates a fair value gap. So if you were to take a box indicator and drag it from the top wick of the first candle and the bottom wick of the last candle, you've just created a fair value gap. On the left hand side, we have an example of a bullish fair value gap, and on the right hand side, we have an example of a bearish fair value gap. Notice the range in the middle of these three candles. Price very often likes to retrace back into this range and then continue on with trend. Overall, this is how smart money likes to trade. Smart money will never buy the highs. Smart money always likes to wait for retracement or even bring price back down into this range before we get the expansion back up with the overall trend. Now that you know what a fair value gap is and how to identify them, let's go ahead and take a look at some live examples. So notice this range down here. This creates a fair value gap. Why is that? Because if you take the wick from the first candle and the wick of the third candle, if there's displacement in between these two candle ranges, that will create a fair value gap. So let's go ahead and label this FVG. Now at this given point in time, we do not chase price. You will notice anytime you chase price, chances are you will end up on the losing side of the trade because you deep down can't sit through all of the retracement, especially not on NQ. Now, if we play this out a bit, notice how price is starting to come back into this fair value gap. Now, I personally like to wait for a lower time frame entry before actually jumping in. Therefore, we have some form of confirmation. So if we were to go down to the 10-minute time frame or even maybe the 5-minute time frame, chances are we'll start to see price start to support bullish price action in this range. Let's play this out a couple more candles, and here we go. Notice how buyers react at the bottom of this FVG. That's telling me all I need to know, that buyers are in fact here. Not only that, if you look at the trend, basically the right side of the screen, this big green candle, you will see that the daily is green. We're also above daily open and we're above midnight open. With that being said, that means the trend is up. So our job is to find an entry back up with the trend, which we have here with this fair value gap. So I'm going to start our position here. And overall, we're going to look to target the high of the day here. Where would I put my stop loss? My stop loss would be slightly at the bottom wick or the most recent pivot. But in reality of it is, as long as you don't see a body close below the fair value gap in which the time frame you found it on, price will very likely support the fair value gap. If we come back to the 15-minute time frame here, what can we see? Notice buyers are stepping in. Let's play this out one more candle. Notice how at the start of this candle, we get a push down, but do we ever get a body close below it? No, we do not. So because of that, you should be pretty damn confident that buyers are in fact supporting up this FVG. Now we need to figure out where is our PT. Our first PT is at the high of the day here for over 112 points, giving you a 2.21 risk to reward. Like I always say, if it's over a 2-to-1 risk to reward, you want to take that trade setup 100% of the time. So we're going to move our TP up to high of the day here, and let's play this out. And notice how aggressive buyers step in once we get that retracement back into this fair value gap straight back to the high of the day. Now let's look at another example. Now with this example, we actually have a number of different confluences paired with the fair value gap. So anytime you see that with the trade setup, very likely the trade is going to work out in your favor. So what can we first see? Notice how we have a 30-minute equilibrium block here in this range. Next, we have two different 30-minute fair value gaps. Both of them can actually be targeted. So we have a 30-minute fair value gap down here in the range of 18,252. And then we have a very, very tiny fair value gap in this range as well. As tiny as this fair value gap is, you will see very oftentimes that price supports these very tiny ranges. Now that we have our fair value gaps and equilibrium blocks marked out, next we want to understand what is the current drawn liquidity. So notice here we have a drawn liquidity at the high of the day. The reason why we're going to be focused on only taking longs is because look at the daily candle. Notice the trend. The trend is up. We are forming no lower lows. Yes, we might have displaced down the previous day, but buyers are currently supporting up this range on a higher time frame, and very likely based on the daily time frame, we will see a continuation up later on throughout the day. So let's play this out one candle, and notice where we get this strong energetic move back up. Buyers step in directly at the fair value gap. So ideally, I personally like to put my entry at the start of the fair value gap and look to target the most recent at least 4-hour buy side liquidity, depending on the time frame in which the fair value gap came from. Next, where do we put our stop loss? Well, this example is a great example of why you have to wait for the body closes, because if you don't wait for the body closes, guess what? You just got stopped out perfectly in a winning trade that you just got stopped out on. If we come down to the lower time frames, such as the 15 or the 5-minute here, what can we start to see in this range of the fair value gap? Notice on the 5-minute, do we ever get a body close below the fair value gap? No, we do not. Therefore, we can see from the lower time frames that buyers are in fact holding up the fair value gap. So I would look to take a long off of the start of the fair value gap, the larger range, and then from here, look to target buy side liquidity or high of the day here. We have a pretty tight stop loss, a 34-point stop loss, with our PT being 124 points away. As you see here, notice how price is perfectly respecting the fair value gaps on the 5-minute time frame. Yes, we might have identified the FVG from the 30-minute time frame, but you will notice on the 5-minute that buyers are supporting it as well. Therefore, the 5-minute is now going to build up to supporting the 30-minute price action that's going to build up to supporting the daily price action. So let's play this out. And notice how we get our expansion up to our buy side liquidity. Fair value gaps is a very powerful tool to add to your edge, but you have to be patient and confident within your trades. Notice here, like I said, if you did have a hard stop loss in place, chances are you would have got stopped out and have to re-enter the trade again once the lower time frame started to support bullish price action. To avoid that, what I like to do is mark out the fair value gaps from a 30-minute time frame and higher, and then dive down as price starts to pull into the fair value gap to get a better entry based on the lower time frame once the market is actually supporting bullish price action again. Now let's take a look at a bearish example. First things first, what can we see trend is doing? Trend is clearly to the downside. So what does that mean? We want to find an entry to short the market with the overall trend. You never want to fight the trend. You never want to be on the wrong side of the trend. That's a very expensive lesson. So as we see here on the 15-minute time frame, notice how we have this 15-minute FVG here. Next, we have to wait and be patient for price to retrace back into this fair value gap. You never want to try to predict price. You always want to be patient and let price pull back to your levels before entering the trade. That's why I always say, let the trade come to you. Never chase. You always want to attract everything in life. So let's play this out a couple candles. And bingo. Notice how we get this push into the fair value gap. At this given point in time, this is where I would look to start to accumulate my position and then look back to the left to see, okay, where is sell side liquidity that we can look to target. So notice how we have sell side sitting down here at 18,394. Now, what do we always say? As long as the body does not close over the fair value gap, very likely the fair value gap is in fact going to play out in exactly how you expect it. Remember what we say, as long as the body does not close over the fair value gap, very likely price will gravitate towards your drawn liquidity. You just have to be patient and also confident at the same time. So I would look to put my stop loss at this most recent pivot high and look to target this sell side liquidity sitting at 18,394. Let's play this out a couple candles. And notice how we are starting to expand back out of this range. This is the type of price action that you ultimately want to see when you are trading fair value gaps. You do not want to see price kind of stall out in this range. You want to see some type of rejection and then a continuation back down in trend, as we see here. So let's hit play. And notice how we get our push down to our sell side liquidity down here. I hope you found this video very helpful. If you did, make sure to subscribe, like, and comment what you guys would like to learn next. I'll see you guys in my next video.